Hey, what's up, my friend? So in today's video, I want to share with you the trading traps that you want to avoid at all costs, especially if you're new to trading. These are the lessons, right, that I wished that I have learned in my early years of trading would have saved me thousands of dollars, right, and reduced my learning curve by years. Okay, so number one, it's this: ignoring the big picture. So I'm not sure about you, right, but for me personally, in my early years of trading, I tend to look at only one time frame. So it will look something like this. Let me just illustrate to you. So let's say the market, it's in a range, okay, then it breaks out, okay, and I think, oh, breakout, right? Time to buy, time to go long, right? So I buy somewhere about here at the breakout point. But unknowing to me, right, that on the higher time frame, the market is actually in a downtrend. So for example, let's say this one is on the a lower time frame, like let's say the 2-hour time frame, okay, and on the daily time frame, let's call it D, the market is actually in a downtrend. So what you saw earlier, this range on the lower time frame is actually a small blip on the daily time frame, right, where the market makes a retracement. So at this point, this whole area is a retracement. This retracement here is the breakout on the lower time frame. And then what happened is that the trend, right, continues, and then it reversed down lower, and I got stopped out for a loss. All right, so this is what I mean by ignoring the big picture. So let me just show you a chart example. So you can see over here, this is the pound yen. You can see that this market pretty much go into a small range, price broke out, retrace, and then continue higher. And if you're unaware of this, right, many traders will look at this as, oh Rayner, hey, look at this, right? Rayner, there's a higher high and a higher low, higher high and a higher low. The trend is up, time to buy. But remember the big picture, right? Don't ignore the big picture. Right, that's a mistake that many traders make, me included. So you can see that on the daily time frame, this portion over here on the daily time frame is actually over here. Okay, this portion here. What you saw earlier on the 2-hour time frame is this portion over here. You're essentially, right, let me just pull out the MA. You're essentially buying into this 20 period moving average. You're buying into this previous support now acting as resistance, and you can see that why that is such a low probability trade. So the first trap to avoid, it's this. Okay, let me just pull out the charts, pull it back, is that you want to pay attention to the big picture, right? Don't ignore the big picture. So this is a trading trap, right? Where you're not paying attention to the big picture, you're not paying attention to the higher time frame, and that's something that you want to be aware of. Trading trap number 2, micro managing your trades. So what do I mean by this? So again, let's say for example, you identify a trading setup, right? So market, let's say, is in an uptrend. Okay, maybe you buy on the breakout of this swing high, right? So after all, market is in an uptrend, you go long, and then the market makes a retracement. Get scared, and oh man, my open profits, it's evaporating, man, it's gone. Should I exit the trade now while I still have something left? Or should I hold on to this trade? I think it's better to exit the trade. Oh, why not let me go down to the lower time frame and see what's the price action doing? And that's what you do, right? So for example, let's say this is the daily time frame, and then you go down to a lower time frame, like maybe the 2-hour time frame. Okay, just an example. And you notice that the price action on the 2-hour time frame looks something like this, right? It goes up, then start going down. And at this point, you tell to yourself, right, man, look at the lower high and lower low. It's a downtrend, man. I better exit this trade before the loss gets bigger. And then you exit the trade over here, and it's just a blip, a retracement on the higher time frame, like the daily time frame. I'm not sure if you are familiar with this, right? This is what I call micromanaging your trades. And let me just give you an example. Okay, over here, you can see that on the daily time frame. Okay, let's say you bought somewhere here. Let me just get this one out. Okay, let's say you bought somewhere here, about here, right? The price break above this highs, you go long. Okay, price break above this highs, you go long. Let's say over here. Okay, go long, fair enough, right? It's a trend continuation trade. Then as the market shows signs of reversal, okay, like this, right, you start to panic, right? So you go down to a lower time frame, like the 2-hour time frame, okay, which is here. Okay, I think it's this portion here. Okay, so you notice the 2-hour time frame, the price action looks something like this, right? Market went into a range, then it had a breakdown over here, and when it broke down, you tell yourself, oh man, the trend is changing, the trend is reversing towards the downside. Let me bail out of the trade. And that's what you do, right? You micromanage your trade. You enter on the daily time frame and you manage your trade on the lower time frame. And you watch the price action on the lower time frame and you exit your trade, right? Trying to minimize the loss. And what happened is that you can see on the daily time frame, you pretty much exited somewhere about here. Right here is where you exit, over here on the daily time frame. This portion. You exited here, and then what happened is that the market continues higher. So this is what I mean by micromanaging your trade. Okay, you don't want to micromanage your trade. This is a trap that you want to avoid, right? The lesson is this, right? Is if you enter your trade on, let's say, the daily time frame, you want to manage it on that same time frame. Or if you're more experienced, a time frame higher. But what you don't want to do is to manage your trade on a lower time frame. Right? Because the lower time frame, right, the market moves in fractals. It is going to form a lot of quote unquote noise out there. It's going to have lower highs and lower lows. That is not related, right, to your trading time frame because you're trading off the higher time frame. Okay, the lower time frame is going to have noise. It's going to scare you out of your trades. And if you follow the price action on the lower time frame, which is irrelevant to you, you're going to find yourself exiting your trades way too soon. Okay, so avoid this trading trap. Do not micromanage your trades, right? This is a trading trap number 2. Number 3, fooled by randomness. What do I mean by this? Okay, so there is something called the law of large number. And by the way, if you're still watching this video, do me a favor, right? Hit the thumbs up button and subscribe to my YouTube channel. The link is all below. This way, whenever I publish a new video like this one over here, okay, you'll always be updated. So do it right now. Done it? Okay. So moving on, right? The law of large number. What it is, right, is that it means that in the short run, your trading results are random. And it's only in the long run it will be aligned towards the system's expectancy. I know that's a mouthful. So let me give you a very simple example. Imagine you have a coin in your hand right now. It's a 50-cent coin. And you were to toss the coin, right? You know a coin, right? Head or tail, there's a 50% probability of coming up heads or tail. And you toss the coin 4 times, for example. Okay, you toss it 4 times. And intuitively, you know that when you toss that coin 4 times, there's a good chance that it's not going to come up 2 heads or 2 tails. It might be 1 head and 3 tails. It might be 3 head and 1 tail. It might be 4 head and 0 tails. That might be possible. Why is that? Because you know intuitively in the short run, when you toss that coin, right, the results are random, right? It might be 3 head, 1 tail, 4 head, 0 tail, maybe 2 head, 2 tail. That could be possible. But the likelihood of it coming up exactly 2 head and 2 tail is not very high. But you know, when you toss that coin more times, maybe you toss the coin 1,000 times, there's a good chance you're going to get almost 500 hits and almost 500 tails, which is about 50-50. In other words, okay, so this is what we mean by in the short run, your trading results are random. So with the short or small sample size that you have, the results, right, is pretty much random, even for a coin toss. And only in the long run, it'll be aligned towards the system's expectancy. So here's an example to share with you. Let's say you have a trading system, right? It wins an average of about 50% of the time and a 1-to-2 risk-reward ratio. Many traders will think that, okay, this system, right, is going to have win-loss, 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 win-loss till the end of time. Unfortunately, that's not reality and that's not true. It's unlikely that your system is going to have win-loss, 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 win-loss forever. In fact, what's going to happen is that you'll encounter maybe a loss, 2 wins, a series of loss, then maybe win-loss, a series of wins, loss-win. So you can see that there are winning streak and there are losing streak. And in the short run, your results is actually random. So if you look at this, in the short run of this example, right, maybe the first 6 trades, right, this one, 1, 2, 3, 4, 5, 6, you have actually 4 losses and 2 wins. Even though this system, right, has a 50% win rate. Why? Because remember, in the short run, your trading results is actually random. And it's only in the long run, it'll be aligned towards the system's expectancy. But if you take enough trades, let's say you take into consideration the full sample size over here, right? Now, okay, you have about 50% wins and 50% losses, right? So this is where, you're letting the law of large number work out over time. Okay, so this is what I mean by don't get fooled by the law of large number. Don't just abandon a trading system just because you have a few losing trades, because that is perfectly normal. That's within the normal distribution that every system would have, wins and losses. And let me share with you a story, right? So early years of my trading, I made this mistake as well. I was at a forum and I came across this Bollinger Band trading strategy. right? And the author said that, you want to be selling at the highs of the Bollinger Band and buying near the lows, right? Very simple system. Buy the highs, sell the lows of the Bollinger Band. And that's what I did. And normal range market, right, that made money. But when the market started to trend, that's where the series of losses occur. And at the point in time, I didn't know what I was doing. So I thought that, oh man, this trading system, it doesn't work anymore. So let me find something else, right? So that's where I came across candlestick patterns, right? Hammer, shooting star, buying the hammer, selling the shooting star. And again, right, made some money at the start, and then the losing streak occurs, and I started losing money again. And then I thought to myself, maybe my trading system isn't complex enough. I need something more complicated. So that's where I started to learn about harmonic patterns, the bat, the crab, the shark, and stuff like that. And again, made some money, and then only to lose it later on. And come to think of it right now, the mistake that I made is actually very simple, is that I was being fooled by the law of large number. I didn't know that a trading system would have winning streak and losing streak. I thought if you have like a 70% win rate, out of 10 trades, you're going to have 7 winners. But by now, that's clearly not the case. Okay, so don't be fooled by the law of large number, right? And you don't want to just abandon a trading strategy when you encounter a losing streak, right? In fact, right, what you want to do is to have a decent sample size, right? About 50 to 100 trades, and then from then on, evaluate the strategy. Not just after 3 or 4 trades you evaluate. That doesn't make sense because you're evaluating something that is random. That's nonsense. Okay, so next one, trading traps to avoid. Number 4, thinking the price is too high. So here's the thing, right? So I'm not sure if this has happened to you before. So you look at a chart and you look at it, man, the price is so high, man. It can't go any higher, right? The market is about to reverse, right? Look at how bullish the candle is, how much it has traveled, right? The market is about to reverse, right? Maybe I should go short, right? Maybe just give you an example, right? Over here. You see this over here, right? Bitcoin, right? At this point. Oh, look at how bullish this is, right? Price has, broke out. Price is so high, right? It can't go any higher. It probably is going to, head down lower. And then boom, market breaks out even higher. Even in fact, at this point, it looks pretty darn high. This looks pretty darn high. Pretty darn high, right? If you look at this, you look at this chart, you think, oh man, this is so high. The market cannot go any higher. It has to come down. It has to reverse. Let me try to short, right? And you go short and you get killed, right? So the point I'm trying to make is that the market, right, what's high can go higher, okay? So remember, bear this in mind, right? What's high can go higher. And likewise, what is low can go lower, right? And I learned this lesson, right, in 2012, right? The crude oil, where he basically had a slump, right? Let me find that crude oil chart, okay? So I was fortunate to be on the right side of this trade, and this was a lesson that pretty much, stuck with me since then. You look at this, again, same thing. Oh man, Rayner, look at this chart. The price is so low, man, Rayner. Are you sure you're going to short this market? You should be buying. You're a fool. You're going to short? Are you crazy? Look at this chart, Rayner. Look at it. How low it is. It can't go any lower. And then, you know better than that now, right? You can see that the market afterwards just continued to slump. Okay, so the trading trap to avoid, number 4, right, is this one. Thinking the price is too high to buy or too low to short, right? Remember, the price, right, it's never too high. Okay, what is high right now can be even higher in the future. So don't make this mistake of thinking that the price is too high to buy. And trading trap number 5, right? Trading without a goal. So what do I mean by this? So here's the thing about trading, right? Is that you're in trading, right, to make money, right? We all are here to make money, right? That's like the broadest goal, right? The top of the category. But when you think about it deeper, you don't just want to make money from trading. Some of you might want to generate a full-time income from trading. Some of you might want to just make 20% a year or 15% a year from trading. Some of you might just want to beat inflation and you're happy with it, right? That's what you get involved in trading for. Or maybe some of you just want to trade for the adrenaline rush. That's all. So here's the thing, right? When you are trading, you must understand, what are you trading for? What is your goal? Are you trying to generate a consistent income? Are you trying to make X% a year? Or are you just trying to beat inflation? Or you just want to do it for the adrenaline rush? Ask yourself this question. And the reason why this is important is because without a goal, you'll not be able to find the right trading strategy that suits you. For example, let's say you want to generate a consistent income from trading. If that's the case, right, then you cannot be trading off the daily or the weekly time frame because the frequency of trades is too little, right, for your age to play out within, a short period, right? You probably need to go down to a lower time frame, right? Maybe the 5 minutes charts, the 15 minutes time frame, and trade off the lower time frame, so you got a higher frequency of trade, so you can play your age within a shorter period of time, right, to generate the consistency that you want. So can you see how your goal would affect the time frame and the strategy you're trading? Or another example, let's say you want to trade part-time, right? You don't want to be staring at the monitor all day long. Then needless to say, you can't be trading off the 5 or 15 minutes time frame, right? You probably be trading off the 4-hour, the daily, or even the weekly time frame, right? Maybe you want to trade to grow your wealth, right? Making X% a year, right? Then those trading approach would suit you better, right? The swing trading, position trading. Does it make sense? Or if you just want to trade for adrenaline rush, then you don't even need to watch this video. Just click the button as and when you like it. Right, you're gonna get a rush, right? Just buy 100 lots before NFP and you get all the rush you want. Okay? So remember, you must have a trading goal. Only then can you find the right trading strategy to suit your goals. So with that said, let's do a quick recap, right, to what we have talked about today. Number 1, right? You want to look at the big picture, right? Okay, that's the first thing. Number 2, plan your trade and trade your plan. Don't micromanage your trade. Number 3, understand the law of large number. In the short run, your results are random, and it's only in the long run you'll be aligned towards the system expectancy. Number 4, the price is never too high to buy or too low to short. What's high can go higher and what's low can go lower. And number 5, know your goal, know your trading goal, and from there you can actually develop right, the appropriate trading strategy, right, that suit your needs. Sounds good, right? Then if you want to learn more, okay, you want to learn about how do I trade, then go down to my website, tradingwithrayner.com over here, okay? I have a couple of trading guides for you. If you want to learn how to read the price action of the market, it's better time your entries and exits, I recommend downloading this guide, right? The ultimate guide to price action trading, right? Just click this orange button and I'll send it to your email for free. And if you want to learn how to ride trends in the market, massive trends, right, to profit in bull and bear markets, then the ultimate trend following guide is for you. Just click this orange button over here and I'll send it to your email for free. Okay, so with that said, I have come towards the end of this video. I wish you good luck and good trading. Hit the thumbs up button, subscribe to my YouTube channel, the link is all below, and I will talk to you soon.